backdrop, let's bring in our first guest this hour. Laura Lau is Chief Investment Officer at Brompton. She's been kind enough to join us here in studio. Great to see you. Thanks as always for joining us.
Thanks for having me, John.
So much to focus on, and certainly I want to talk about the earnings and economic story, but this Scotiabank news highlights what some people were starting to hear. You know, the banks in Canada, are they going to be impacted by the possibility of job losses? Now, Scotiabank announcing 3% of its workforce being let go. What's your reaction to that?
We actually expected it. What we've seen is over the pandemic, first of all, they were not allowed to let go of people because they had deals with the government, and then they're hiring people almost like drunken sailors. So you could see that the employee count was going up all across every bank. So it's not a surprise that they're reducing. We saw Royal announce, BMO announce, and I think in general banks, it makes sense for them to get rid of 1% to 3% every year of their bottom performers, and you change your businesses, emphasize one, de-emphasize another. So I think this should be normal course. They
put a bunch of different commentary into this statement this morning. They talked about some of the changing aspects of their business, but I do wonder if the weakness for the economy overall is a consideration for a bank right now, just in terms of what, workforce realities.
I think it has to be, because we're coming towards the end of interest rate cycle, so that has helped their margins, and at the same time, higher interest rates has put pressure on their customers. So there's less loan growth, and then we have about half of the mortgages in Canada, the amortization's over 25 years.
So, one of the questions that folks who are trying to figure out where the economy goes from here have asked, because, I mentioned we've got a Bank of Canada interest rate decision coming up a little bit later this month, and most of the economists don't expect the bank to raise rates for now, to hold steady. And we got inflation data this week that showed some signs of cooling, but the jobs market has been fairly resilient in this country. So I suppose the question becomes, if you see some of the largest employers, like the banks, cutting more jobs, that would speak to some of the fragility of the economy. Maybe that's the kind of thing the Bank of Canada is going to be monitoring closely?
I think the Bank of Canada has to look at it, and just looking at the GDP data, it's softened. We're slowing more than the United States. And as I said, our mortgage market is a lot more fragile. Almost every mortgage in Canada is a short-term mortgage. It's 5 years or less. So we're seeing that customers are being under more and more pressure as they renew their mortgages at higher interest rates, and there's just less to spend. So I think that the Bank of Canada has to keep that in mind. So that's why I do think they're probably done with mortgage rates. With interest rate hikes, maybe one more, maybe, but that's about it.
So companies are having, obviously, we see what, Scotia has this announcement this morning on a day when we are knee deep in a lot of earnings. And I mentioned you've got different flavors of earnings out there. You've got, some companies that are like Morgan Stanley waiting for investment banking business to pick up again. You've got consumer giants like Procter & Gamble that have, to a certain degree, seen sales cooling, but their pricing power has been strong. So what are you watching this earnings season to determine whether you want to stay, invested or whether you want to make some changes to your portfolio strategy?
So this earnings season, the whole market's wondering, was last quarter the bottom of earnings, or is this the bottom of earnings? It keeps on getting pushed out more and more. The consumer seems more and more resilient, more able to pass on price increases. So that's what we want to watch, or is it getting pushed out more and more? And Procter & Gamble actually was able to increase margins, because that's the other story is, will these companies be able to increase margin? Will labor costs eat into that? Commodity costs eat into that? So we're definitely watching that. In terms of Morgan Stanley, we have seen increased activity, more offerings. We've seen more M&A. So it does seem like that is picking up.
All right, Laura.